And we are now underway. Welcome everyone to Resolve It in 30. We've got a great opportunity today to learn about everything there is about the 7A loan process. And we've got Kieran O'Connell from the Greater Philadelphia Hispanic Chamber of Commerce, our Director of Membership, and our host for Resolve It in 30, who at this moment is going to take it away and introduce our special guest. Kieran?
Great, thank you, Javier. Good afternoon, everybody. Hope you're doing well and staying safe and staying cool. We appreciate that you've taken this time to join us for our every other week Resolve It in 30, which is where we take 30 minutes of your time, our time, and an expert's time, and talk about what we call, sort of the quote unquote, the hot topics. One of the hot topics is obviously capital, money, loans, cash flow, etc. And here to talk to us about a very, very, very important program that is open to everybody through the Small Business Administration, that's 7A loans, is Shannon Degiglio. Now, Shannon is the Lender Relations and Economic Development Specialist here in Philadelphia with the SBA, and she handles the 7A loans. We may go a few minutes over, 30 minutes, because Shannon has a great deal of information here. As you know, please make sure that you're muting your microphone. If you have questions, put them in the chat box. We're monitoring those. And at this point, let me introduce Shannon. Shannon, take it away, and we look forward to this.
Okay, awesome. Thank you so much, Kieran, and thank you for having me here today. I really appreciate it. So again, my name's Shannon Degiglio, and I've been working with the SBA for about 7 years now. My title is a Lender Relations and Economic Development Specialist, which just means I work with all of our lending programs and all of our partners to host things like this, to try to educate small businesses on what's out there and what's available to them. I'm also the Veteran Business Development Officer, so I'm actually a current Pennsylvania National Guardsman for about the past 18 years now. I've been serving. And another key role that I have in the SBA is to help veterans who are looking to start a business. So if any of you have ever served, or you may be a spouse of a veteran, please make sure that you jot down my contact information today and connect with me so that I can make sure that I'm always giving you the most up-to-date information on things that are available to veterans for small business owners as well. So you can go to the next slide. Okay, so the reason why I'm here today, and I have about 20 minutes, so I'm gonna move through these slides very kind of quickly and just make sure that I'm giving you all of the information that you're here for today. But I really want to just go through what exactly an SBA loan is and how it can help you to launch your business or grow your business, and exactly when do you know that you need to have an SBA-backed loan. All of those questions are things that we get very often, and there's different programs within the SBA as far as loans go, and so I hope to help you to kind of determine what different programs are out there and which might be relevant to you and to your business. Okay, so basically, SBA-backed loan can help you in a number of different ways. We offer lines of credit. We come into play mostly for startup businesses who, go to their bank and the bank says, well, you're a startup business and we really don't feel like we know if your business is going to be profitable or not, so we're just not going to be able to do it. When you think about a banker who's looking to lend you money, the number one thing that you have to think about is risk, okay? That's all a lender thinks about, is how much risk am I taking and making a loan to you? Okay, so in this situation, what we do is we provide a bank a guarantee. So the bank can still make the loan to you, and the SBA will help to kind of back your loan and make sure that in the event that the loan did ever go bad or your business wasn't successful, that the SBA would be there to give assurance to the bank that they would be paid off and wouldn't lose any money. So, so we come into play for a lot of those things. If you're looking to purchase a building, if you're looking to purchase a piece of equipment, all of those things are eligible under our SBA 7A loan program. Next
So
slide.
Shannon, let me just ask you very quickly, if I'm understanding you correctly, I don't go waltzing into an SBA office. I go
Right.
through my bank to get the SBA loan. Is that correct?
Yep, that's correct. Yep,
Okay.
so you would go to the bank for the SBA 7A loan. Okay,
Okay.
so the way that all this works basically is that, again, the SBA is not a direct lender. The only time that we are ever a direct lender is when it comes into disaster loans, which we all may be more aware of today because of COVID environment and how that works. So that's the only time that you would ever directly come to the SBA with a loan. So our role is to offer guarantees to banks. So what we tell you as the business owner is that you go in and you work with your bank and you tell your banker, hey, I'm looking for a loan, and you let the bank decide whether or not they need to use SBA or not, okay? So from that perspective, it takes out of all the back and forth work between, do I need to talk to the SBA? Do I need to talk to the lender? In this situation, you always talk to the lender. The lender's going to handle everything from the application process. They'll service the loan, and you'll make your payments to them, and you'll never have to do anything with the SBA in that regard. Next slide. Okay, so just to kind of give you an idea of, when does an SBA loan come into play? How do you know that you need one? Okay, how does the bank know that they're going to use SBA? All right, so let's look at the situation where you are putting in a loan application. All right, now you have been in business for 10 years, you have impeccable credit, your business is solid, the bank says, you know what, this is a great loan application, and we are just going to do it under our own commercial credit guidelines. So we go, yes, the bank's going to do the loan commercially. Okay, so take on the other end of the spectrum where you're a business who has just started, but your credit's really, really bad. You don't have a business plan. You don't really have anything to show as to how you're going to run this business. And the bank says no, like this is way too much risk. We're not going to be able to do this loan commercially at all. Okay, but say that you are a business who maybe is a startup. Maybe your credit's not that great, but it's okay. But you have a great business plan and you have a great idea, and you seem like you've really done a lot of research. So the bank may say, well, we're not going to do this loan commercially because there's just a little bit too much risk because it's a startup and the credit's just sort of okay. But we will do it with an SBA guarantee because the SBA guarantee is going to be the kind of the reinforcement to lower the risk down. Okay, so that's where we come into play. We're not looking to make bad loans good. We're looking to make good loans better, if that makes any sense. Next slide. Okay, so why would a lender use an SBA guarantee, which we kind of just discussed. Next slide. Okay, here just kind of written out, this is where we normally come into play in these 4 different circumstances. So we talked about startups and typically being higher risk. Another time that we really come into play is when the business has insufficient collateral. So just from working in banking before, when we had someone who wanted to apply for a business loan, we wanted to collateralize that loan way above 100% of the loan amount. So we would take, anything that was owned because we want to make sure that if, the loan were to stop being paid, that we would be able to collect something back and get our money back for the loan. So an SBA guarantee kind of goes in place of that collateral, okay? So the SBA is paying the bank back. So, and a lot of times startup businesses don't have a lot of collateral to get started. So that's really where we come into play in a lot of situations. Non-standard repayment terms are another one. We offer very flexible payment terms, interest-only periods for mainly seasonal businesses. So, if you're a business that only does, your big businesses in the summer, and then, you drop off during the fall and the winter and you're not really generating many sales, we have interest-only payments that you could structure during that time. So that's really another big reason. And then, of course, our industry risk is really just basically if you are a higher risk business and you're in an industry that, we're not sure if it's going to be around in 10 years, or, there's a lot of volatility in it. We want the lender to reduce their risk, and we offer the SBA guarantee on that. Next slide. All right, now not all loans are eligible for an SBA guarantee. All right, now we talked about how the loan program mitigates the risk, but basically it's not always going to be a case where we're going to be able to do an SBA guarantee. There's some businesses that are ineligible. Next slide. All right, so some of the businesses that are not eligible for an SBA loan is we don't do any loans to nonprofit organizations, okay, or any religious or charitable organizations. They all kind of go together because we are really looking to do lending under 7A for cash flowing businesses. So what that means is basically we're looking at your stores, things that are actually generating a sale. So these organizations really are depending on donations and fundraising, so they're not actually cash flowing businesses. Also, gambling, speculation, we really don't get involved in any of those types of businesses. I actually just also got off the phone with somebody who wanted to buy, 8 properties, but he's operating them as landlord-tenant. Those are not considered eligible under SBA because they are considered passive income businesses, okay? They're not generating sales. We're looking to do actual businesses that are doing sales with customers day to day, okay? So pyramid sales are ineligible only basically because there's a corporation somewhere at the top that has full control over the day-to-day sales. So, you're looking at like your Mary Kay or Avon businesses that are ineligible. Any illegal activities, this used to go without saying, but now since we've had a lot of businesses who are getting involved in hemp and marijuana because the state has legalized some of those activities, we have to let you know that because under the federal definition, it's still illegal. We do not get involved in any of those types of businesses currently either, okay? Because we always go by the federal definition since it's a federal program. And then just any kind of sexual material, that always kind of depends, like if you had a shop, where a very small section of that store was, like, I don't know, I get weird when I have to talk about this, but like, if there's like, adult magazines or something like that, and it's only a certain percentage of the revenue, we might look at that. So if you have any questions on that, you can always consult with your lender that you're working with.
Let me ask another question here. How about service organizations? So for example, like consultants, are they eligible for SBA loans as well?
So it would depend. If they're a consultant, it would depend on the types of businesses that they were operating, and what, like what if they had like accounts receivable and stuff like that. So, they'd have to be classified as small by definition and for profit.
Okay.
Yeah.
Thank
Okay,
you.
so you're welcome. So the last thing is that, and this is a big one, there cannot be any prior loss to the federal government. So if you're a business owner that has had a loss to the federal government, that would immediately kick you out of the program unless you were trying to resolve that by getting on some sort of payment plan, and you can show that. And that also includes student loans too. So make sure that there's nothing that would come up that would say that, you didn't pay any federal debts off. Okay. Go to the next slide. All right, so, we've been talking a lot about the 7A loan program, and that's our topic for today. So what I'll do is I just want to talk about some of the subsets of the 7A loan program and the different types of reasons why you might want to look at, either an SBA Express, a cap line, export, or community advantage loan, since they're all subsets of the 7A loan guarantee program, and they all kind of are tailored to different lending needs. And then I'll just end by talking very briefly about the 504 program and the micro lending program, since in total we have 3 flagship loan programs here. I just want to give you the, just, you know, a real quick overview of those two as well so that you are aware that they exist. Next slide. Okay, so under the 7A program, basically to be eligible for this, you have to be independently owned and operated and classified as a small business. So, you know, pretty much 99% of businesses in the United States are considered small, but if, you know, you have a question, you're not sure if in your industry, you can always go on to our website and check the NAICS code for your industry. And we also have size standards, alternative size standards for considering yourself small. So that's just the two things that you have to check off to make sure that you're eligible. You have to be small. Next slide. All right, now use of proceeds, again, you can use this for many different reasons. We have a lot of businesses who do just, you know, they take out a working capital loan to help pay their day-to-day expenses, help them to manage their cash flow. Inventory, you know, help to purchase inventory and get that, you know, stocked for their business. Lines of credit, furniture, fixtures, equipment. We can also refinance debt for compelling reasons. So we're not really looking to ever refinance someone's current existing loan if it's considered on reasonable terms. So that means like a compelling reason would be that you had a credit card that was at maybe like a 25% interest rate and it's interest only, where you had a loan that is going to have a balloon payment. They would all be considered reasons why we would allow a 7A loan to refinance another loan. There has to be a 10% payment reduction as well in, you know, the loan that you have currently and what the new one will be. Expansion and renovation, if you want to improve, you know, your business, renovate it, do any leasehold improvements, that's fine. And also for purchasing buildings or land are acceptable uses of proceeds as well. Next slide. Okay, so our loan program goes up to $5 million. Our average loan size is about $200,000 though, but you can go up to $5 million. Our guarantees of what we offer to the lender, if the loan's under $150,000, we offer a 85% guarantee. And anything above $150,000, we offer a 75% guarantee. Okay, so that basically just means that of the portion of the loan that you are getting, that percentage is covered by the SBA. It's guaranteed by the SBA. Okay, so our terms for these loans, if you're doing a working capital 7A loan, we go generally up to 7 years. It can go up to 10 years though, with probably, I think it's about whatever the revolving time is. So say that working capital line of credit revolves for 5 years, then it's termed out for 5 years for a payback, okay? We also go up to 10 years for equipment or the useful life of the equipment, and up to 25 years for real estate. Next slide. So what are the fees? There's always a fee. We have one fee that we charge to the borrower. It's called a guarantee fee. This amount is based on the percentage of the loan. So whatever the loan amount is, whatever the guaranteed portion of the loan is, we will calculate a percentage, and that's going to be the guarantee fee. Okay, so it can be rolled into the loan, so it could be paid off, you know, during the whole term of the loan, or it could be paid at closing. Next slide. All right, now the interest rates. We are never going to dictate what the interest rate will be, but we do put some caps in lines so that, you know, this doesn't turn into a loan program ever where, you know, where a lender would be able to charge you just a very like erroneous rate that's not in line with the current market. Okay, so we typically say that rates are a little bit higher usually with SBA loans, and that's basically because the lender's taking more risk in doing an SBA loan, but they're not so high to the point where they're just not worth doing, okay? So So basically, if you're looking at, less than a 7-year term, you would look at whatever the prime rate is currently and then add on a maximum of 2.25%. Okay, and for anything greater than 7 years would be prime plus 2.75%. Now that's the maximum rate that a lender can charge. It doesn't necessarily mean that will be the rate, it just means that that's the maximum that they can charge. So we typically say, if you are seeking out a business loan, we first recommend talking to the bank that you have a relationship with already, and then you can also look for maybe 1 or 2 other banks just to compare rates and see what they offer. Okay, so there is no prepayment penalty either unless you have a term that's over 15 years, like you're doing a real estate loan and you pay it off in the first 3 years. That's the only prepayment penalty. Next slide. Okay, so we've kind of already talked about this. You can go to, let's see. I do want to mention this. So this is SBA Express. So this is a different program. This is one of the subsets of the this program. Now, if you're going to get a line of credit, you'll want to do an SBA Express loan. Okay, like I said earlier, it's a 10-year maximum loan, and they offer a 50% guarantee. And the rates are a little bit higher under lines of credit than they would normally be on 7A. So our max are prime plus 6.5 or prime plus 4.5, depending on the loan amount that you get. Okay. Next slide. Right now, Community Advantage is actually a very new program that we have. And in the city of Philadelphia, we have one Community Advantage lender. They're called WORC, the Women's Opportunity Resource Center, that offers Community Advantage loans. Now, these loans are provided by non-bank lenders, and basically economic development, institutions, and they offer loans that are $250,000 or less. And this typically comes into play, when you may not be able to obtain a loan through a regular bank, because in here they're looking at different underwriting standards. They're looking more at character-based lending than credit-based lending. They also provide you with technical assistance, and maybe if you're not able to get a loan, they'll work with you on the reasons why and help get you up to speed so that you're able to obtain a loan. So there's no collateral required for loans under $25,000, and again, these loans go up to $250,000. Next slide. Okay, so yeah, this is basically, I mentioned everything on here. We still provide the guarantee, and the maximum variable interest rate on this is prime plus 6. Next slide. Okay, now Capline is just another type of subset of the 7A program. If you are doing any kind of contracts, this might be a good program for you to look into. Basically, the way that this funding works is that if you have a contract in hand, so say you make pencils, and somebody gives you a contract and says, I need 1 million pencils, and you're like, well, great, I have this contract to make 1 million pencils, but I have no money to make them. This will front you the money, advance it to you, so that you can fulfill your contract. And then once the person who wanted to buy the pencils pays you, you pay back the cap line with those money. So this is just really a way to advance money to help you to manage contracts. And if you have any questions about this program, it's not used very often, but it does serve a very good purpose for certain types of businesses. Next slide. Okay, so again, just the maturities are very much the same that they go up to 10 years on different types of, depending on the type of cap line that you choose. Next slide. Okay, so those, for those of you looking, any of your businesses are doing any kind of exporting, okay, so if you're selling anything that goes to a different country, you may want to look into our international trade loans. We provide a 90% guarantee, so that's sort of the advantage to the banker to do it. But yeah, if you are looking at any kind of, things that are going to a different market outside the United States, or you're selling to a company that is selling your product to somebody outside of the United States, then you may want to look into our international trade loans or export loans. Next slide. Okay. And finally, our microloan program is another very good program, especially for startup businesses and especially for businesses that may be only looking for a smaller amount of funding. So typically, these microloans, they will go up to a maximum of $50,000, but typically our average loan is about $10,000. Now, there's various microlenders that are located throughout Philadelphia, and I know I'm going to forget some of them, but there's WORC, there's Finanta, and you let's see, Wilma, you're going to have to fill in the blanks there because I'm not
Sure.
remembering.
So with Finanta, you know that you now have Community First Fund since they merged, and then you have West Philadelphia, the Enterprise Center. So there is a bunch just working for Philadelphia.
Thanks, Wilma. Yeah, so basically what these are, you wouldn't go to a bank for a microloan, you would go to one of the organizations that Wilma just mentioned. And what they do is they look at your loan application based from a character standpoint, not a credit standpoint. So very similar to the Community Advantage program, which they're virtually the same. They just have different lending caps that they do. So they're basically looking at your experience in running the business. What has, what's qualified you to be able to run this type of business? What does your business plan look like? What have you done? So they're not necessarily going off of business credit and those types of things. They want to just know what your ability to run the business is. So therefore it makes it a little bit easier for you to get approved. The microlenders also provide technical assistance, which just means, again, that they're going to be counseling you throughout the time that you have a microloan, and they're going to make sure that you're staying successful and reaching your goals and your milestones of your business, and they're really with you the entire time. The interest rate is fixed rate, which is, unlike any of the other programs that we've talked about today. The interest rate will probably be a little bit higher, probably around like 9 to like 11-ish%. But really this loan program, we also say, is kind of like your first credit card, where, you get it, you pay it off, you establish business credit. And then, once you need a bigger loan, hopefully your business is growing, then you're able to go and, go to a bank and either get a conventional commercial loan or an SBA loan. Okay, next slide. Okay, so we kind of talked about this. I don't think I mentioned, but the term is about 6 years. Normally they're termed out about 5 years. Next slide. Okay. All right, and so the 504 program, just quickly on this, if you're looking to buy any kind of land or a building or any kind of piece of equipment, you may want to look at the 504 program. These ones are accessed through certified development companies, and we have currently 9 of them that are located in Pennsylvania. Next slide. Okay, now this is a very confusing slide, but just know that basically the biggest benefits of doing a 504 loan is that you have a CDC that is partnering with a bank to do one big loan for you, okay? And the CDC has 40% of the loan that you're requesting, and that rate is fixed rate for long term, anywhere 10 to 25 years, which is awesome. Fixed rate, and it's below market interest rate. I think the rate right now is like around 3%, which is like amazing. So that is a really big benefit in itself. Okay, so then you have a lender. So the CDC is working with a bank. It doesn't matter who, it's a bank. And they are doing 50% of the project, and they will give you just a regular commercial loan for 50% of it. And so the other biggest advantage that you have is that you only have to typically put in 10% of your own money to the project, where in normal lending, even 7A lending, banks are looking for about 20%, okay, of your own down money. So that's kind of one of the bigger aspects of all of this. We really say that it doesn't make sense for you to do a 504 loan for something small. They're typically bigger projects. So like, these are like your hotels or, wineries or restaurants or, typically we see a lot of businesses getting 504 loans who are restaurants or hotels. Certainly there are smaller ones out there, but it makes a lot of sense when you're looking for long-term financing and you don't have a ton of money to put into the project, then you may want to look at a 504 loan. Next slide. Okay, so again, just before profit, small business. Okay, next slide. All right, I think this is the last thing that I'm going to leave you with, but how do you connect with lenders? How do you connect with SBA lenders? We have something that's on our SBA website. It's called Lender Match, and it's not inclusive of every single SBA lender that we have, but those who have signed up to use this platform are on there. You'll go on there, you'll describe, what kind of financing you're looking for, where you're located. You don't have to put in any kind of like personal information like socials or tax ID numbers or anything like that. So what will happen is this gets blasted out on that platform to all of our SBA lenders who have signed up to use this program. And it's a way for them to review what your request is, since every bank has different businesses that they're really looking to lend to and different appetites for different, loan amounts and whatnot. So if they see something that, this is, kind of within their wheelhouse of what type of lending they do, then you can actually have them, they'll click accept, you'll get their information. I think they'll get your information, and then you guys can connect, on your own, just as a way to be, virtually introduced to banks that might be interested in working with you. Okay, so that's that program and how that works, and that's free to use. And again, it's just a good tool. So here's my contact information. You can always contact me at this email address. Again, especially if you're a veteran, please contact me. And Wilma is on the call. She's my colleague who actually covers Philadelphia County. So, I'm sure, maybe we could share her information as well. But we're always here to assist you with any questions that you might have. Please feel free to email us. We're all, working remotely right now. Probably like forever now. I don't know, but but we're always here to help. And and the last thing that I want to mention that I knew I was going to forget to do this, but right now, because of the CARE Act, if you apply for an SBA loan, now this is any loan, 504, microlender, 7A, the first 6 months are going to be paid by the SBA. Okay, but you have to apply and close your loan by September 27th. Okay, so that's right around the corner. If this is something that you're looking to do and obtaining financing, and now might be the time to do it, because those first 6 months are going to be covered and completely paid for by the SBA. All right, so that's a very big perk right now.
Wow, Shannon, I want to, first of all, what a great presentation. Thank you so very much. I don't think that many people are aware of the breadth and depth of, the different products and services that are available through the SBA, okay?
Yeah.
Oftentimes one of the things that we have, especially in our community, people look for, sort of the micro loans, we're not necessarily in the $5 million area, yet. But, one of the things that in terms of the opportunity to really understand the different areas of financing are terrific, because there's almost something for everybody here. We did have a couple of questions, and we've got about 2 minutes left. And they are asked and answered in the chat box, but Shannon, just to keep you aware of them, one of our terrific members, Sylvia Lucci, was asking, wondering if there's a difference between the rates and the fees, depending on what bank you use.
Yep, so the guarantee fee is going to be the same regardless, because that's an SBA fee. The rates are going to be determined by the lender. So again, we set the maximum that a lender can charge, but yeah, that's why we kind of recommend that you work with maybe 2 or 3 different banks just to kind of compare offers and see what kind of offers you get.
Okay. And I would just like you to, because I think it's really important in the last, maybe 30 or 40 seconds that we have here, you talked about, the free, okay, already paid for, all right, part of what's happening. I think that's really critically important. And we have, some very valued members on the line here. Can you repeat that again so that that information can get disseminated to, some of the others, as well as this, presentation being up on our website?
Yeah, absolutely. So under the CARES Act, there is a provision now that any 7A micro lending or community advantage or 504 loans that are booked and funded by September 27th of this year, the first 6 months of those payments will be completely paid for by the SBA.
So you're saying you can give me free money?
Free money, 6 months. Yeah.
I like
so
that.
if you get a 2-year loan, those first 6 months are going to be completely paid principal and interest by the SBA, and then you'll just owe the other 1.5 years.
I love that. All right.
Yay.
Well, we will leave it at that. As you all know, we have some, before I turn it over to Javier to say goodbye, we have some very important things coming up in terms of upcoming events. As I say to people, it's just like voting, vote early and often, go to our website a lot, because we do some very dynamic programming and we're constantly updating the website. So with that, I want to, Shannon, I want to thank you for your time. This was really terrific. We will be putting this up on our website. And let me turn it back over to our man of the hour, Javier Suarez.
Thanks, Kieran. A reminder again that this program or this session was recorded and it will become available very soon on our website, and you can contact us if you want to get the link or anything like that. Kieran and all of our guests, thank you very much for Resolve It in 30, and we'll look to having you back again in our next Resolve It in 30, I believe in 2 weeks. Enjoy your day and enjoy your weekend. Thank you all.